And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud sponsor of the SARA Rail Conference 2025, powering progress, connecting economies. Good evening, 8 minutes after 6. I'm Stephen Grootes. Welcome to The Money Show. Well, a big results day as we have at this season. Lots of results from companies whose financial year ends at the end of June. So we will speak to the CEO of Bidvest in a few moments, Mpumi Madisa. We'll speak to the CEO, the Chief Financial Officer rather, at Santam Wikus Olivier. Also tonight, we will hear from Paul Cruikshank, the CEO of RCL Foods. Plenty of other news about as well. And ArcelorMittal, perhaps the most important, does look now, according to various reports today, that their CEO has basically written to workers and said, I'm sorry, but we are going to close up the Newcastle business. And that's after, and you heard it last week, the Industrial Development Corporation giving them 1.7 billion rand. And then Moneyweb reporting today that last week, NERSA basically said to Eskom, you have to give ArcelorMittal cheaper electricity. And Eskom said, well, that means that consumers, they mean you when they say consumers, by the way, that consumers will have to pay more to subsidize that. NERSA went, well, yes, we know. So, yeah, a lot going on. And when you try and manage industrial policy like that, you want to intervene. I understand the pressure. You want to protect. You want to save jobs. You want to save livelihoods. In some cases, you want to save communities, dependents. There's a lot riding on it all. And yet, you also kind of almost intervene in hope that the underlying problems, maybe the steel price will go up or Transnet will get its act together or something, and it doesn't happen. At some point, you do have to cut your losses. You do have to stop just plowing money into something. Either way, though, still, I think for a lot of people will be very, very sad. And I was listening back today, you may remember a conversation we had with Saul Levine about it a while ago. He suggested actually our longer-term industry won't be that badly affected. We'll get another view on that tonight as well with Donald Mackay. He's the expert on trade, and just have a conversation with him about how government maybe could have done more, maybe should have done less, depending on how you view these things. So a very interesting conversation. That'll be in about an hour's time. Also tonight, the latest on the situation around Blue Label Telecoms. We know that they're going to list Cell C. That'll mean that all four of our cell phone networks are finally and sort of suddenly listed on the JSE. But all sorts of issues around Cell C. There's a sort of strange kind of dynamic in cell phone networks. It's called the third operator. So the first two, in our case, were Vodacom and MTN. Cell C was the third and Telkom was the fourth. And what happens in many other markets is what's happened here. The first and second are fine. They usually start together. The fourth is okay. Something happens to the third. There are very complicated economic reasons behind it, as I understand it. But we'll get into that in about 45 minutes from now with Duncan McLeod from Tech Central. I don't know how you feel about your cell phone network. Do you love them? Do you hate them? Do you not really care? Do you treat them as a bank? Do you try and avoid them and use Wi-Fi to make voice calls, WhatsApp calls, wherever you can? I know you'll have a view on 011 883 0702 and 021 446 0567. Also, your thoughts on ArcelorMittal and the kind of policies that we should be following. Voice notes tonight on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, the conglomerate Bidvest confirming today that while its revenue was up by 5% for the year to the end of June, its profits were up by just 1%. It's been hit hard by a big decrease in bulk exports for its freight division. Its commercial units' profits were also down, as were the contributions to the business from its stake in Adcock Ingram, which of course is about to be delisted. Well, the CEO at Bidvest is Mpumi Madisa. Mpumi, good evening. Thanks for your time. Good to talk to you again. Your freight division having an impact on your bottom line. You say there's a decline in bulk exports. What's leading to that change, do you think?
Good evening, Stephen, and thanks for the opportunity to just talk through the results. We've seen a decline in bulk commodity volumes. It started in the first half of the year and has continued into the second half, and it's sitting in two places. So bulk grain volumes are down. They're down on average about 83%, so that's significant for us. And then on the bulk commodity side, we're also seeing a decline in bulk commodity volumes driven by pricing and also just some of the inefficiencies we have in the system in terms of being able to move product. We also saw that bulk commodity volumes were also down in Mozambique. So not just in South Africa, but in our Mozambique operations. And that contraction in freight is about 10%. And freight is our second largest division. So when the freight division doesn't perform and you're seeing that kind of contraction, it does have a material impact overall on the numbers.
Your grain sort of movements, your grain volumes that you were transporting were down 83%.
Yep.
Did people choose other options? I know the grain harvest was down. The next one's expected to be up dramatically.
Yeah, so it's primarily maize, and it's maize export volumes. And the maize export program didn't materialize in the way that it normally does. We are, though, going back to cyclicality that we've seen kind of in pre-COVID times. But it's also just a function of demand, right? So the demand for our local maize just hasn't been there. And it's also a function of pricing. And there's always a window and timing in terms of when our maize export moves. The pricing must be right, the timing must be right, and the yield or the crop size must be right. And we just missed all of those. And so there was just a significant amount of maize. So the maize is there. The farmers are sitting with it. It's in storage. It's just not moving. And if it's not moving through the ports, we don't handle it, Stephen. And so if we don't handle it, there's zero income coming through, and we've got a fixed infrastructure through our terminals.
Sure. Your commercial products division, revenues were also down there. Where is that suffering the most?
So the main reason is in two areas. The first one is renewable product sales. During load shedding, we experienced a significant spike in renewable sales. So in around the 2023 financial year, when we had significant load shedding and blackouts, the renewable sales just climbed significantly. And so that base is very high. We've got more consistent power today, and we're really just working through what has been an extremely high base. And so that contraction in volume plus a contraction in margin is what has impacted commercial products. And the balance of the portfolio, Stephen, we haven't had infrastructure spend in South Africa in a long time. And this division is reliant on infrastructure spend, construction, municipal spend, and that kind of stuff. And we haven't seen it come through. So overall, the market has been quite subdued. And we've also just seen a contraction in the balance of the portfolio. And so the commercial products is down quite significantly at around minus 28%. So that division did perform below expectation.
Your Services South Africa department, you report strong inbound leisure travel. You also sold a lot more coffee at airports, I noticed, Mpumi. Are you seeing a lot more business from tourism? Are those numbers picking up? More people coming into South Africa?
100%. So inbound tourism is extremely buoyant. South Africa remains a destination that foreign travelers want to come to. And so when you see those volumes go up, we attach those volumes, whether at the airport, in a hotel, at a restaurant, wherever that traveler may be. And so travel and tourism remain strong. And not just from a historical perspective, Stephen, in terms of our FY25 results, but we can see the forward book about 6 months out, and the forward bookings in terms of inbound travel also remain strong. So the travel and tourism industry is holding its own. It's one of the industries in South Africa that I would put up there in terms of economic growth.
I don't know if you have this kind of level of detail to hand, but is it mostly going to Cape Town or some other parts of the country getting some of that as well?
I don't have it in that kind of granular detail, but I think you can make a couple of assumptions, right? Because it's leisure travel. So people would be going to the bush. They would definitely be going to Cape Town. They would definitely be going to the winelands. They would definitely be going to the beaches because it's leisure, right? So you could kind of make some assumptions around the spread, but I couldn't specifically say X percent is going to these parts of the country.
Sure. Adcock Ingram, you're going to delist it. They've had a very poor year. Their second half was better than their first half. Is this the right time to sort of be delisting and going through that process, taking much closer control of that company, I presume?
Yes, it is. A delisted Adcock is much easier to manage, less regulatory obligations, bring it closer to home and really run it the way that we run our other subsidiaries. We're excited about the potential partner that we have in Natco Pharma. They're a large global pharmaceutical business. We think that they're going to bring a lot of value in terms of how we can kind of increase and spread our offering particularly within our prescription division. So we're looking forward to the expertise, the kind of direct pharma global expertise they'll be bringing in. NATCO also has ambitions for the continent more generally. So we will also be having a conversation around which areas does it make sense for Adcock to drive that continental growth versus NATCO driving that continental growth themselves directly. So great upside with having that kind of shareholder in the room. And then we still believe that there's probably more synergies to unlock just between the two businesses, between Bidvest and Adcock. So we are really looking forward to getting our hands around the business and running it in a delisted environment.
Mpumi Madisa, thanks so much. CEO at Bidvest, really do appreciate the time tonight on The Money Show, 18 after 6.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Big changes coming for the insurance group Santam. They're setting up a syndicate with Lloyd's of London. It'll give them more international exposure, obviously. Also, strong earnings out today. Their earnings per share up by 19% in the 6 months to the end of June. Wikus Olivier, the Chief Financial Officer at Santam. Wikus, good evening. Obviously, you'll move to Lloyd's in London, an important first step. What kind of insurance operation do you want to set up?
Good evening, and good evening to the listeners as well. So yes, Lloyd's is a key part of our international growth and diversification strategy that we're driving. So at the moment, we already do business outside of South Africa through our Santam Re business, as well as our specialist solutions business. So Lloyd's is really complementary to those two areas. But the focus will be on specialist lines of business, including, for example, property, corporate property, marine, liability, etc. And also geographically focused at more globally and in other markets than where we operate today.
We've seen other big South African companies do this in the past. It hasn't always ended so well, Wikus. I mean, are you confident you have the expertise, the people, the sheer experience of those markets to make it work?
Yes, definitely. So for us, it's important that we grow in areas where we've got the skill set. So within these specialist lines of business, we've got big market shares in Africa, in South Africa as well, and it's where we've really been successful over many, many years. So for us, it's about exporting those areas that we know, growing where we know, and not venture into unknown areas for us. But then very important as well is to make sure that you also bring in the very good skills that's also got London experience and specifically Lloyd's experience as well. So we are now focused on bringing in those skills. Because that will be very important for us to be successful within the Lloyd's market.
You say all parts of the business did well during the period. They all contributed. Alternative risk transfer increased their profits by 28%. How does that business work? Why is it doing quite so well at the moment?
So the alternative risk transfer business is effectively what we call a cell insurance business. So that's effectively helping people that want to self-insure, first of all. The big corporates or multinational businesses that doesn't want to go through traditional insurance business, but rather to do their own self-insurance through a insurance cell. But then secondly, we also do businesses with partners that's got an existing client base that's non-insurance, but then want to sell insurance into that base. And they will typically then also do at times those arrangements through a ART cell. And what we effectively, from a revenue perspective and from that type of business is fee income based on the administration services that we provide for them. And we also earn investment margin on the assets that we manage on behalf of clients. And then thirdly, in some cases, we will also participate on the insurance business that they do right within those cells. Mm. So those are the kind of the three biggest revenue lines for us within alternative risk transfer business.
One of the main reasons you had such a good year was that there were no weather catastrophes during the period, Wikus. Are you changing your underwriting techniques to manage what does seem to be more extreme weather, more weather-related catastrophes more often?
Yes, definitely. So although the first half of this year, we didn't see major weather-related catastrophes. It is something that we do expect to come through in future. We've seen weather conditions being much more volatile over the last number of years. So we are specifically focused on initiatives such as our geocoding initiative, which really looks at the specific location of each and every property that we insure and what is the specific risk exposures around that property, including risk of flooding, is it, for example, close to waterways, but also from a fire risk perspective to look at what are the specific risks, and then based on that, deciding whether we want to accept the risk or what is the appropriate pricing from a premium perspective for that risk. We've also expanded our surveying, which makes sure that from a client's perspective, they make sure that they've got the necessary preventative measures in place, for example, sprinkler systems, etc., and that those are also being maintained. So all of those are just some of the examples of how we manage the increased risk associated with property in particular.
So are there some places sort of in South Africa where you may just say we're not going to insure that? It's just not worth it. If you've had 2 floods in that part of KZN in the last 2 years, we're not going to insure you.
It's definitely not a case of our regions or our areas that will be excluded. It's very much property specific. So where property is located, for example, within the flood zone, there's been numerous floods and there's really nothing that can be done from a risk mitigation perspective. We may decide not to write the business. And it's simply a case of you can't charge enough premium to compensate for the risk. But those are really exceptions. And we haven't had any case where we had to exclude a whole municipality area, for example, to say this is not insurable anymore. It's very much property and case-by-case specific.
Wikus Olivier, thanks very much indeed. Chief Financial Officer at Santam. Really do appreciate the time. 25 minutes now after 6 o'clock on The Money Show.
The Money Show.
The Markets.
Sia Mbata is an investment analyst at the Old Mutual Investment Group. Sia, good evening. Santam results, having some good weather helps.
Good evening, Stephen. Most certainly. Really great results out today of the insurers. Their share price is largely flat, slightly down, so not too bad. And, I mean, as an investor, you could effectively think of Santam as South Africa's safety net. You would have heard earlier, they don't necessarily sell you cars or houses, but they protect them. And Santam has reported some strong results. Headline earnings up about 20%, as well as basic earnings up about 19%. So really great results there. And the key driver behind this was the conventional insurance underwriting margin, which was at 11%. So this was way ahead of management's target range of 5 to 10% and way ahead of market expectations as well. And the claims ratio definitely did help, and that was driven by benign weather events. So the claims ratio sits at about 56%, and this is the best or the lowest claims ratio we've seen since I've been alive. So I won't give away my age, but it's been about 30 years roughly.
Sure.
And effectively less people are claiming, and when less people are claiming, insurance collects more premiums.
It's very interesting. Bidvest, what did you make of the conversation that we had with the CEO? I mean, it seems to me that, it's such a big sort of company. They do so many different things, and yet there are 1 or 2 problems that maybe are outside their control.
But certainly, as with most businesses, it is cyclical. They are exposed to certain elements within the economy. But what I love about business, it's a phenomenal business. It actually sits within the better quality bucket. It's quite a diversified business model. And you can almost think of Bidvest as the ultimate behind-the-scenes operator. So if you eat at a hospital canteen, there's a good chance that Bidvest caters to it. If you've been to a stadium, they typically are responsible for cleaning after the matches. Or if you've been to a car dealership and you've changed a spare part, most likely they've handled the logistics of those parts. So it's quite a diversified business model. So I think that's been a great point. But if I look at the most recent results, the key thing there Group earnings under pressure, really driven by the contraction within freight, so that was about 10%, and then within the commercial products. But outside of that, despite the decline in earnings, you've got strong cash generation coming through, which I think is testament to the strength of the business as well as the management team. And going forward, I think the focus is then on organic growth. So they've done quite a number of acquisitions within the last year, and it's all about integrating those acquisitions and getting further synergies from those. So really a great business overall.
Sun International, and a statement out from them today, they expect headline earnings to be up by nearly 60%.
Yeah, quite substantial. So I think the key thing to differentiate there is basic earnings per share. So those are expected to decline between about 8 to 11%, and headline earnings. So those are driven by one-source or non-cash items. But I think the statement was the trading update rather, was a bit vague. So we didn't receive much detail on the drivers. But the important thing there is that the balance sheet is stable. So they're currently at 1.5 times debt to EBITDA, which is great because that's below the covenant. I'm fully excited to see the results that are being released next week, Monday.
And then Harmony, the gold miner, they seem to be getting the go-ahead from shareholders in Australia to buy the mine, the copper mine.
Yes, so nothing new there, nothing too exciting, but so they've received they've received approval for the sale of 100% of the shares to Harmony Gold. And, we've already received regulatory approval from the SARB, which was on the 5th of August, as well as the Australian FIRB, which was on the 19th of August. And so we're awaiting the final court sanction, which is to be heard on the 9th of October. And hopefully this is completed by the end of October this year. Was expected to be completed by the end of October. And I think what's interesting about the asset, it's really a high-grade, long-life, underground copper operation. And the great thing about it is that it's cash flow positive from day one. So immediate contribution to group earnings. It's high grade, low cost. And I think it plays in with the theme around decarbonization, the energy transition, really diversifying Harmony Gold's portfolio, shifting away from the volatility of gold towards copper.
Sierra Mbata, thanks very much indeed. Investment analyst at the Old Mutual Investment Group. Bringing the time on The Money Show to 6:30.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
17 minutes to 7, the time on The Money Show. Good evening. RCL Foods reporting today, their headline earnings up by nearly 29% in the year to the end of June, despite their revenue from continuing operations being up by only 1.8%. Their baking division seems to have made a strong turnaround. Still issues, though, around the price of sugar and the impact of sugar imports. Paul Cruikshank is the CEO at RCL Foods. Paul, good evening. Your baking business increased revenue by just 1.8%, but your underlying EBITDA of that business, was it nearly 55%? How were you able to do that?
Evening, Stephen, and thanks for having me again this evening. It's been a very good year for baking, and pleased for the team because they put a lot of effort in over the last 18 months to prepare for this financial year. And you're right, revenue is very muted. Volume is under pressure in most categories. There are some areas within baking which volume has improved, but we've focused very much in the last 12 months on costs that are in our control, and really managed to eke out across the whole of baking some significant cost savings through a number of initiatives across all our facilities.
Was some of that finding a way to get out of Eskom? I mean, are you using other forms of electricity? I presume you need quite a lot of it.
We do need a lot of it. So in our sugar business, we produce power, but unfortunately, you can't wheel it all the way through to our plants in the Highveld. So, some of the cost savings that came through would have been lower amounts of diesel as a consequence of less load shedding, that's for sure. But the bulk of it would be in initiatives which we've done ourselves. But we don't generate our own power at many of the facilities in Gauteng.
Some of your baking product volumes grew, you say. Are people buying more of your product? Is that because other food might be more expensive? Could you maybe rather be taking market share from some of your competitors?
So in the areas in which volumes improved in baking was mainly in our powers and specialty operating units. And it's difficult to measure market share there. We sell most of our powers into forecourts, and specialty service most of Woolworths products. So we saw some nice volume upticks there. Bread remains a challenge market. We're certainly not stealing share from anybody. Pricing parity in bread is actually an issue and remains so, although the bread part of the business did improve over the prior year. But we're comfortable that our market shares are remaining pretty much intact across most of the business, one or two areas where we'll be under pressure, but overall pleased with the share holding up.
Your sugar business revenue was down slightly. By less than 1%, so a tiny fraction. But is that section of your business under a little bit of pressure? Is there a lot of imported sugar coming in?
So Stephen, let me start with that. Business has performed brilliantly in the last few years, record results 4 years in a row, and even this result is still a very high result. I think it's the fourth highest in the business's history. So very pleased with the performance. The issue is imports. There's no question. Imports started to come in the last quarter of our financial year and continue to come in now. And it's all linked to the dollar-based reference price and tariff that's in place, which is now not strong enough to protect the imports from coming in. And we do see some risk and headwinds there. Our tech are busy reviewing that tariff, and we hope for in the next 6 to maybe 8 or 9 months that this is resolved and some additional protection is brought in. Otherwise, there will be some risk to the sugar industry, and it's been through quite a time in the last 5-6 years. So we don't need any more pressure. But back to your question, we still peaceful with our sugar performance. We think that they performed well. And in sugar, what we really focus on is what we can control, which is costs and making sure that we crush our cane and get our production as sharp as we can.
Where's the sugar coming from that's coming into the country? Obviously, it's quite a lot of it for you to go to ITAC.
Not 100% sure where it's coming from. Probably Brazil, big sugar producer. Some of it can come out of India. You know, the international market in sugar is very buoyant. So most countries are protected. Their local industries are protected. And then the surplus production is then dumped into various international markets. Some of the countries convert some of their sugar into ethanol, and depending on that price, they'll play the game of, do I produce ethanol or do I produce sugar? So if you take a relative scale, the imports that have come in the financial year are materially up on the prior. The last few years that protection has actually worked very well for us. So it's something for us to keep our eye on in the next financial year.
You grew your pet division and you've been focusing on premium brands, and we see some of the big retailers now going quite aggressively into pet food, pet accessories. They're investing in that space. They're setting up their own sort of pet shops. Is that good for you to have a little bit of interest in that market?
Yeah, definitely. We have a wide portfolio of brands that can play in various market segments. So the move into, and we're very strong in retail. So there is some risk to our business going forward, which we're busy working through. But most important thing is the brand portfolio that we have that can play in those segments. So retailers moving into the specialty, what we call the specialty pet channel, is a positive thing. They'll certainly drive the category hard, which is what we're looking for from a growth perspective. But we're quite well positioned in pet to pick up some of that additional volume should the category start to grow.
I mean, our society, like others, has sort of changed the way it sees pets in some households. I mean, almost completely. From sort of, dogs being fed scraps outside. I mean, that still happens in many, many cases in South Africa, to some, literally sleeping on a bed. There's a lot of opportunity there for you.
Yeah, absolutely. And we're very strong in certain parts, particularly dry dog and cat is where we're strong in the market. And it's quite a diverse market. There's wet pet food, which is growing and big, which we're in, but very small in. And that's a part of the portfolio which we plan to grow out in future.
Paul Cruikshank, thanks very much indeed. The CEO at RCL Foods, really appreciate the chat. I'm fascinated by how much money people spend on animals nowadays, and you do see it in all sorts of ways, accessories. I mean, obviously, if you spend any time on social media, you'll probably see a cat video, but you'll probably also see someone being ridiculous with a dog in an aeroplane and first-class travel or something like that. I'm not really talking about that. I'm talking about, the special cushion or the special this or the special that. Is there something you've bought your pet just because you'll like it? The pet will like it, the cat or the dog, and maybe something your parents or the generation before you would never have dreamed of doing? Are you still one of those who think that dogs need to sleep outside? 011 883 0702 021 446 0567.
The Money Show, Stephen Grootes, is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025, powering progress, connecting economies.
Well, 7 minutes now to 7 the time. Blue Label Telecom's confirming today some of the technical details about how it's going to list Cell C on the JSE. There's debt, of course, to deal with and all sorts of other issues as well. Duncan McLeod is the founder and editor of techcentral.co.za. Duncan, good evening. I mean, some of it is very sort of technically financial. I suppose the bigger point is that Cell C is going to join the other cell phone networks on the JSE.
Yeah, it's actually quite exciting, Stephen. We haven't. It's quite a rare thing these days to have a major listing on the JSE, and even rarer still, I think, to have one in the tech sector. So it's quite exciting to have a tech listing coming up and one of this magnitude.
This is a very difficult question, but is Cell C a good investment at the moment? I mean, when it came into the market, was the third operator, promised big things, struggled for a little while. I remember Alan Craig, of all people, took it over for a while, made some big changes, made some big noise. I still remember their sort of 5 gigabyte special, which seemed amazing at the time. Then it seemed to sort of run into a bit of trouble again.
Yeah, it did. The problem Cell C has had since its founding, really, is that it was a late entrant to the market. It launched about 6 or 7 years after Vodacom and MTN had already established themselves in the market and built national networks. So it came along as a latecomer and didn't have the deep pockets of its larger rivals. And so it struggled to compete on infrastructure and to deploy infrastructure across the country at the sort of scale of Vodacom and MTN. And it's always struggled in that regard. And it's tried to compete, but in trying, it got itself into huge debt, tens of billions of rands, and a hole it dug for itself. And it's had to go through a number of recapitalizations over the years to prevent it from going to the wall. It's actually a miracle this business is still around, given the difficulties it's been through over the years. And I think it probably just shows the tenacity of the Levy brothers who run Blue Label, that they've actually saved this thing. That debt problem has been a noose around its neck for decades. And I think what we're seeing here with the proposed restructuring and these transactions that were announced today, if they go ahead, they will once and for all, it seems, finally deal with Cell C's balance sheet, and that will put it in a much stronger position and make it a lot more attractive to potential investors ahead of the listing. So we could see an interesting listing here.
I mean, what that would mean then is suddenly it would be able to almost compete with both hands. The weight, the albatross around its neck will be gone. And I mean, do you think it could then start to challenge? We're at a very interesting time in the telecom space.
We are indeed, and they've got a new operating model which is very interesting. They're doing something no one else in the market is doing, and that's they don't operate their own radio access network anymore. That means they don't own the sort of the network that connects the base stations to the customers. They've outsourced that to their network partners, MTN and Vodacom. So it's an interesting sort of co-opetition model. They've got strong agreements in place with both MTN and Vodacom, and so they've adopted what they call a capex light model. So they no longer have to invest the billions of rand every year to try and keep up with Vodacom and MTN and deploying 4G and 5G and later 6G networks. They can ride off that infrastructure using their own spectrum from ICASA still, but it's a new model which is capex light and which should prevent them, hopefully, from getting into the sort of debt problems that they've experienced in the past. So this is a very different business to the Cell C we've seen historically. And this should position it well if they're smart in the way they package their products and come to market with well-priced and good products that consumers are interested in. They could indeed carve out a good niche for themselves. I think they've got probably about 10 or 12% of the market at the moment. And we could see that expanding in the coming years if they box cleverly against MTN, Vodacom and Telkom. But of course, those are also very strong competitors, and they're not going to want Cell C coming along and eating their lunch. But Cell C is run by George Mendes now as the CEO, and he's ex-Vodacom. He's got a lot of experience in the telco space, and the management team is strong. So I think this business is actually looking quite good.
The future, obviously, for cell phones is data. I mean, so many people don't make any ordinary phone calls anymore. They just use WhatsApp. Does it make sense? I mean, is there an opportunity for someone in Cell C's position to just give up voice calls and concentrate on data?
They're a full-service telco, so I think they'll continue to offer voice, but there's no doubt that voice is in structural decline and has been for years. Many people now make phone calls over WhatsApp because the data network is good enough for that. In fact, we've seen some of the operators now offering very low-cost plans where you can get 1,000 minutes of calls for 199 or 299 rand a month, which was unheard of 5 years ago. So I think that just shows that voice has become a commodity, and that indeed is data that these operators are selling. They've tried over the years to offer complementary services, and I think we see that more from your bigger players like MTN and Vodacom, who've branched out into things like fintech, mobile money, et cetera, et cetera. Cell C has tried some of those things before, such as in the media space, where they tried to launch a streaming media player. Cell C Black was a failure. And I think they're just focusing on their core business now, which is selling airtime, selling data, and that's probably the right strategy for the moment. And of course, they've got a strong partner in Blue Label, so then we may see some opportunity for the two companies to work more closely together going forward, especially now that it looks like the transaction is going to go ahead where Blue Label is going to take full control of Cell C. So it will allow the management team at Blue Label to work much more closely with Cell C than they have in the past. So we could see some interesting propositions coming forth. But they haven't spoken in detail about what some of those propositions might look like. But I'm sure they're thinking carefully about, thinking beyond just selling data bundles and offering complementary services. But we don't have an insight into what that might be yet.
And Duncan McLeod, thanks so much. Really appreciate it. Founder and editor at techcentral.co.za. Lots going on in the telecoms business, obviously. And just the idea of moving away from voice calls only to WhatsApp calls. And I think it is happening astonishingly quickly, that transition, if you think about it. I mean, probably 5 years ago, you'd never have made a WhatsApp call in your life. Now, suddenly, it's pretty much all the time. It's very interesting to see how quickly that is changing. And then who's going to be left on voice phone networks, on normal old-fashioned voice networks? Well, I'll tell you who. It'll be the spammers. They'll be the ones still using the old system, and they won't be using WhatsApp because WhatsApp hopefully won't allow them to. All right, lots to come. We'll find out more about ArcelorMittal and their decision to basically close down their Newcastle operation. We'll talk about lifting up the transformative power of supportive leadership. And don't forget, Desiree Markgraf, the film and television producer, should be talking to you about her career, one of the big minds behind Shaka Ilembe. You with The Money Show at 7 o'clock.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, 10 minutes after 7. Confirmation today, ArcelorMittal SA writing to its workers, telling them the company will be closing its long steel business. 3,500 direct jobs go as a result. As you know, a long drawn-out process here. The IDC, as you heard from their CEO last week, giving ArcelorMittal 1.7 billion rand in the last financial year. And MoneyWeb reporting this morning that Eskom was essentially told by NERSA it had to give ArcelorMittal cheaper electricity, which basically meant other consumers, you would have had to pay for it. Donald Mackay is director at XA International Trade Advisors. Donald, good evening. Underneath all of this are weak steel prices and weak steel demand, but is government policy to an extent responsible for the situation? They've thrown a lot of money at it, and it's going to close anyway.
Yeah, I never thought it was a wise idea for so much money to be given for such a short amount of time. I think there is an element of it. You've at the heart of this, you've got a conflicting policy between ArcelorMittal as a steel producer from iron ore versus the mini mills, which produce steel out of scrap metal, and they get something around a 30% price advantage. And that at some point feeds into their prices, which then ends up undercutting Mittal. So what we've done is we've incentivized and subsidized at a time when there's too much steel in the market. So there's too much coming out of China, and then we're bringing more and more steel online in South Africa, and that's simply a recipe for something to fall over.
The mini mills, if they've got a 30% price advantage, and as I understand it, one of the reasons is that scrap metal has a lower melting point, so requires less electricity. I mean, you can't compete with that. There's no point in trying to subsidize that kind of competition.
Well, so the mini mills also get a subsidy because of cheap finance out of the IDC. So there's lots of money flowing out of the IDC and on their raw material. So they're purchasing their scrap at a 30% discount to the global market. And that kind of combination is a perfect storm. Yeah, it's a problem.
We've seen, all sorts of interventions. Should we not have bothered? Or was it, and isn't this what always happens? When a company like ArcelorMittal runs into trouble, at first you want to help if you're a government, and I understand that. And then you kind of get caught up in it, and it goes on and on and on, and you might wait for the weather to change, but it never does, and suddenly you've lost 1.7 billion rand.
Yeah, that is a risk. Also governments find it very easy to spend our money, which wouldn't have in any other environment. So there is an element of that. But the reality is there's also a global steel market, which is problematic. There's simply too much steel everywhere. And, of course, the demand in South Africa remains suppressed. So think of all the infrastructure projects we've been promised for years and years that never happen. Those are steel-hungry projects, which are not executing. And then think of all of the manufacturing businesses that are failing because of municipalities that don't work, Eskom, etc. And you can very quickly see that the local demand that would normally sustain these businesses is just horribly and artificially suppressed because the government is not executing properly on lots of what they should be doing.
And if we wanted to, help Transnet with new railway lines or better railway lines or new improved railway lines, you would need a lot of steel, I imagine. I'm no expert, but I presume.
Yeah, so absolutely. In fact, somewhat darkly, ironically, on the railway line front, we do not produce railway line to the standard that is required by Transnet and PRASA. So the rail we do produce is going into things like the mines, etc., but we do not produce to the standard set for the rail industry, which is in itself just a ridiculous situation to be in.
There are also perverse consequences or perverse outcomes. So in this case, one of them, and I presume it was an unintended outcome, was that two of the competitors to ArcelorMittal went to the Competition Commission and suggested, I haven't read their documents yet, but suggested they were basically, ArcelorMittal were using the government sort of bailout, the 1.7 billion rand, to undercut their product. Something like that was almost inevitable if you look at the nature of our markets.
Yeah, no, absolutely. That's just such a bizarre case because they, of course, themselves have product that is artificially cheap because of the subsidy. So it's kind of a battle between one part of the IDC and another, funding each other. So that's a very peculiar situation.
What's the best thing to do? Let ArcelorMittal go to the war, do what you can for the people of Newcastle, and get on with the mini-mill policy? I don't know, and I know there can be different views on this. I don't know what the long-term consequences will be of the closure of ArcelorMittal. I understand that some of their very specialized products can't be made by mini-mills. I don't know how much that will affect the economy.
Yeah, that's above my pay grade to answer if we should let them go or not. But what I will say is, You can't save everyone. So the downstream fabricating steel sector has already lost over 200,000 jobs in the last decade. The jobs are going to be lost somewhere. What government has to do is make a decision. What you can't do is try to protect every single company. At that point, I believe you cause more harm than good. So whatever the decision is, they need to make it and move on with it and then leave the market to adjust at that point.
A lot of commentary about the sort of role of the DTIC, the Minister Parks Tau, quite a lot on his plate at the moment with the US and everything else that you and I have been talking about and everyone else over the last few months. Do you get a sense that the Department of Trade, Industry and Competition is actually on top of things? It can sometimes feel that they respond, that they're reactive, but I mean, that is also the nature of their game, unfortunately.
Yeah, I think most of the problems that Mittal are dealing with have nothing at all to do with the DTIC. You still cannot get iron ore properly out of the Northern Cape to Newcastle because of the railway situation. Yes, you do have the conflicting policies, which sits with Minister Tau. But you have a whole host of issues which Cobus Verster has identified as problems. And almost all of those problems sit somewhere else. So, the somewhere else has got to come right. It's you can't fix this by subsidizing your way out of a failed municipality, and you can't subsidize the fact that there's not functional railway lines. So that's a problem that has to be fixed at source. And I'm still a little cynical around whether that's actually going to happen.
I mean, someone's going to write I'm sure there'll be one or two PhD theses on the whole issue of ArcelorMittal. Are there lessons here for how to intervene or not to intervene next time?
Yeah, I think our problem is not in the interventions, but in not doing the things that you're supposed to be doing all the time. So there should never have been a position where Transnet got to the state that it is in. In the same way that we should never have been in a position where Eskom collapsed to the point it did before we started doing something. It's simply unforgivable that we have almost no functional municipalities in South Africa. So those things have to get fixed. I think the interventions are noble. I understand why the DTIC has the instinct they have, but I'm afraid you cannot subsidize or protect your way out of the fundamentals of our economy, which do not work, and they've got to get fixed.
Donald Mackay, thanks very much indeed. Director at XA International Trade Advisors. Really appreciate the time. I mean, there's so much going on with this, and yeah, I find it difficult to disagree with Donald. I don't know what a government can do except fix all of the things that we actually need to take responsibility for, including municipalities, politics, the way we manage money, fixing things like Transnet and the railway system. 19 minutes now after 7.
The Money Show
with Stephen Grootes.
On the next Money Show, Peter Engelbrecht, the CEO of the Shoprite Group, will take you through the retailer's financial results and the state of the retail sector. Personal finance expert, co-founder of Galileo Capital, Warren Ingram, will talk to you about the reasons why some high-income earners are often financially fragile and go broke. You can earn a lot of money and still not save. Also, analysis of all the top business news of the day.
702. Stephen is on X.
At Stephen Grootes.
Well, late on Friday, a U.S. appeals court ruled that most of the tariffs that had been imposed by the U.S. President Donald Trump were now illegal, and he, of course, is now appealing, and off we go to the Supreme Court, and the Supreme Court generally has sort of backed Trump, although this is an issue around the limits of power and of presidential power, and I imagine they'll want to look at the law very, very carefully, and I wouldn't be surprised if we get to a situation in the States, in the U.S., where even the Supreme Court says, actually, we need to sort of find a way to send a message to the president. I mean, who knows how this is all going to play out. It did strike me, though, that one of the problems for many of the U.S. trading partners is the uncertainty. And a court ruling like this actually just makes the uncertainty worse. It doesn't help because you don't know what's going to happen. All it means is that you now can't make a decision until the Supreme Court rules. That's all it means. And even then, you don't really know what's going to happen because Trump has shown, particularly on issues around tariffs, that he can change his mind and change it quite often and change it in a way that you don't really expect. So all of those things, normally you think a court challenge, good, we get a proper airing of the views and a final decision. Here, I'm afraid to say, I'm not quite so sure.
The Money Show.
Business books.
Well, 21 minutes after 7. There are about 1 million leadership books, and from time to time I do become a little cynical about them. I think Ian Mann's about to tell me to stop that. But I must admit, to me, it does seem that leadership has become more complex and more difficult. It's not just that things are speeding up, it's that there's more to navigate, And the people you are leading come from more diverse parts of our societies. And that means that you maybe have to think a little bit more deeply about how you lead. I find some of it very, very interesting. Well, Ian Mann's our regular book reviewer and MD at Gateways Business Consultants. Ian, good evening. Thanks so much for coming in. I know you're a kinder person than I. Lifting Up, The Transformative Power of Supportive Leadership by Jen Marr. Is it any different from all the others?
Yes, it is. And I'll tell you why. I think it's actually very practical. And I think that's why it's very useful. The fact is that if you look at employee equity, and there's been quite a lot of work done, Gallup polls done work on employee equity regularly and often, and what they've come up with is that the most important person in employee engagement, employee engagement. Most important thing in employee engagement is management, more than anything else, and that the most important manager. The most important thing a manager can be is to be supportive, to be a supportive manager. And the good news is that supportive management isn't a natural trait. It's something that can be learned. And that what this book does is it basically gives you a way to understand what you need to do and then how to do it. I think in that sense it's very valuable. But if we look at what's going on in the world today, I think that we probably suffering from more mental illnesses, more mental challenges than we've ever done before. Everything from the anxiety disorders all the way through to depression and to burnout. I think that is so common in the workplace today. And it's got to do with all of the fact that we're living under such pressure and the world is not getting any easier. And if certain parts of the world are more difficult, where we are is very difficult. And under those circumstances, the role of the manager and the Gallup poll showed this. The manager is the most significant person in your life, probably equal to, according to stats, equal to that of a partner.
Sure.
So if you had a bad day with a partner, it'll mess up your ability to function for a little while.
Yeah.
Exactly the same thing happens with the manager, except that you probably spend more time with the manager, or you could be spending more time with the manager than you do with your partner. So it becomes terribly important that we know what to do. In addition to which, we're starting to employ Gen Zs. Those are people born after 1998 about. Those people are the most different people we've ever had as our children or our employees.
Really? That's a big thing to say.
No,
it's interesting.
They're the only generation that grew up with a cell phone in their hand.
Ah, yes.
When we meet next time, I will be able to share with you the impact of social media on everything, just the way we perceive reality. Now, those people are suffering as well, and by the way, they've got much higher, and we don't understand them. We really don't understand them. Now, if you look at what a supportive leader can possibly do or should be doing, probably the best example is this: the woman who founded the hospice movement. She used to communicate. This is a quotation. She used to communicate to people that you matter because you're you, and you'll matter because you're you until you pass away. And that she said that the people said of her that was a message you got from her, incredibly strong message, and that was very, very affirming. I think we have to do the same sort of thing with our staff, except obviously at a different level. But the point of noticing people, I notice you as a person. The key issues to make it happen is to notice, to affirm, and to let people know you need them. What we don't do much of is we don't notice people well, how they're doing, how they're feeling, what they're thinking, what issues are they dealing with. We don't affirm them by saying to them, that presentation you did, I can really see the effort you put in, just that much. Or what you did, your presentation really helped us to close the deal. The reason we don't do that is because we go into what they call the awkward zone. And the awkward zone is the gap between our compassion and our ability to act. And often we're stuck in the awkward zone because we simply don't know what to do. And we have staff issues, which could be anything from colleagues not, you can't get on with colleagues, or you've got family issues, or you've got work issues, you've got just complainers with no solutions. All those sorts of things happen in the workplace, and you have to respond to them. The way most people respond is they either try to be the fixer.
Yeah.
Yeah, I know you're getting a divorce. You should know when I was getting a divorce. And the person looks at you and says, your divorce has got nothing to do with me, and it's not the same. Or you get other people who aren't fixers, but are deflectors. So when you tell me that something's really going wrong in your life or your workplace, I just deflect. I'll talk about anything else except that, or I'll ignore you, which just makes it worse. Or I don't know. I'll try and sort out your play. The fact is, and she gives a fabulous example, which captures absolutely everything. She believes that we don't need verbs. Sorry, we don't need nouns when somebody's in trouble. I don't need to empathize with you. Empathy is a noun. I need a verb. She describes she moved into a new village, and before she moved in, somebody said to her, our kids are going to be the same age. When you move into this village, let us know we'll have a carpool. She said the first day she moved in, the woman said to her, how's it going? She said, it's terrible. I've got all these things to do. I'm not coping. And the woman, instead of saying, I really feel for you, I know what it must be like, the woman said to her, do you have food in your fridge? And she said, no. And that was it. And she said the woman came back about an hour later with all she could possibly need for breakfast the next day and a bottle of wine.
Yeah.
We don't need, and this is a very, very important point. If you're not somebody who's naturally empathetic, naturally supportive, we don't need that. Just verb people. Things are going wrong. Do you need any help? Is there any way in which I can connect you with a counselor? Is there any way that I can have a conversation with you and your colleague? We need to respond to our staff. First, we need to notice. We need to affirm them. We need to take action, and we need to use verbs.
Ian Mann, thank you very much indeed. Our regular book reviewer and managing director at Gateways Business Consultants. The book is Lifting Up, the Transformative Power of Supportive Leadership. The author is Jen Marr. 28 minutes after 7.
The Money Show. How I make my money.
24 minutes now to 8 the time. Well, from time to time, you'll see and hear something that you know is going to be a cultural event. Think for a moment the first time you knew that there was a movie coming about Black Panther, or if your memory goes back far enough to the 1980s, the series Shaka Zulu that people spoke about all the time and still strangely watch. And perhaps the closest we've come to that kind of dramatic event here in South Africa in the last few years, a piece of culture which has been created and become an event, something that people talk about and watch again and compare and sort of start the Monday morning conversation about, is the TV series Shaka Ilembe. Well, one of the people who's the co-executive producer of Shaka Ilembe is Desiree Markgraf. And I should say she's had a very long career before that, doing all sorts of very interesting things, often related to our history and our culture. Desiree, good evening, and thank you so much for taking some time tonight to explain how you've made your money, how your career has been over the years.
Hi, good evening. Thank you very much, and thank you for having me on the show.
You've made in other interviews, you've spoken and commented about the fact you were growing up during the apartheid era, and in a way that's probably shaped a lot of the culture that you've been working in ever since. What kind of community were you growing up in?
You know, I grew up with my mother. My father and my mother had separated very early, and I grew up in a lower income, middle class white household with a single mother. We grew up in the Johannesburg area in Jeppe, Belgravia, and went to a boarding school there. So I think I had a pretty normal sort of Joburg childhood in the 70s.
Okay, I like the way you put that. I mean, what's normal now and what's normal then are about 16 different things. At the time, information about what was really going on was quite hard to get. You would have to go and search for it. Were you aware then, and maybe as a sort of young adult, how strange our society, that society was compared to other societies? Did you have a sense of what was sort of going on?
You know, I did. I was fortunate enough that my mother was quite politically aware. She was active to some extent through the church, that she worked at the Swedish church at the time. And so I was aware in my early childhood about the abnormal society that we lived in. And certainly I was aware of the huge disparities between growing up as a young white person and as a young black person. But I would say that I really only got an awakening, I think, properly in my 20s when I started working. And I was fortunate enough to have started working in the film industry quite young as a runner, and found myself working in Soweto. And that was, just a massive awakening to me on, I think, the kind of privilege that I felt that I had grown up with, because I'd sort of grown up thinking, well, we were a poor white family and it was just me and my mom. But when I sort of opened my eyes and saw a bigger world around me, I realized that was not the case at all.
I mean, I think for some people to sort of leave where they've come from and go into Soweto at the time, you would have been one of very few white people, would have been quite a shock to a lot of people.
I have to say it was the best time of my life. I learned so much. I felt that I grew. One of the things that as a child I remember my mother saying to me, and I don't think I quite understood it at the time, was that she felt that we lived in an extremely superficial society because we weren't really talking about what was going on around us. And I think that had a lot to do with white guilt and white shame, and people really couldn't talk about serious issues. And so for the first time I found in my 20s that I was talking to people about real things and experiencing real life around me. So it didn't feel strange to me at all, and I made a lot of wonderful friends that I have today, and I think it's, I'm grateful. It conscientized me in a way that, I wouldn't have got otherwise, I think.
Did it inform that clearly that period informed a lot of what you did afterwards? I mean, quite a bit of your work has sort of been about that. You did a lot at the Apartheid Museum, for example. I mean, you must have, that obviously set you on a road.
I suppose so, in a way. I mean, I think that the one thing was that I was particularly interested that mainstream media, television, radio, so ignored black life in a cultural way, and that the little bits and pieces that one saw on radio and television were extremely curated. And so it was something that intrigued me, and it really wasn't until I met with my partners, that I've had all these years since then, that I suddenly realized, well, this is really what I would like to focus my energy on, is telling these stories that I felt hadn't been told at the time. Of course, now television and radio and everything has changed, but it wasn't like that in the early 80s.
So how did you move through the field? I mean, I know very little about television production, but I presume it kind of goes project by project. And if you do well on one small project, maybe you get a slightly bigger role on a second small project, and then maybe a slightly bigger role on a third sort of bigger project. How was that progression?
Yeah, pretty much like that. I mean, I think when I started, I went through the industry first as a runner, and then, getting various jobs and growing and learning and becoming a production manager and starting to work with money and understanding the dynamics of money. And I then started a very small little production company of my own, and I thought I'd focus on doing corporate videos where I could learn my craft without being in the public eye if I made a mistake, so to speak. And, the corporate training market actually in the early 80s was extremely vibrant and buoyant. South Africa was changing. There was this, massive push to educate around change of policies in businesses, about affirmative action. So it was a quite exciting time for the training space. And so that's what I cut my teeth on. But my heart had always really been in drama and telling stories. And then, of course, in the late early 90s, I had met with Angus Gibson and Tebogo Matlatsi, and, we started working together, and our first pitch that we really got had been to develop what then became Yizo Yizo.
Yes. I mean, I've spoken to Angus Gibson once or twice, and I mean, he really, the group, what you were doing at the time, really set popular culture for generations of people in South Africa. And Yizo Yizo was a big part of that.
Yes, it was such an exciting time, Stephen. I mean, we were sort of on this exciting moment with the end of apartheid, and South Africa felt so absolutely full of possibility, and It was the first time that we were able to really tell stories that felt like it really reflected, the whole of our population. And in a very open way, we were able to explore what the challenges were that were facing us as a society. And of course, Yizo was a story that was looking at what were the after effects of, liberation before education. Our schools were struggling, and there was a big push by the Department of Education, government, stakeholders, etc., to really try and get education back on track, and not just for a small group of the population, but for the whole population. So it was an exciting project, and it was, at the explosion of Kwaito, there was so much energy in South Africa at the time, and it was a very exciting project to work on. And we had no idea that the project was going to be the success that it was. I mean, there was no benchmark for it, really. And I don't think it was financially successful in the beginning. I think, advertisers were extremely scared of us because it was a show that was quite different, a little bit wild. It certainly, showed us warts and all. So it took quite a while before the money followed the excitement that the show generated.
I find as a journalist working here, this country has the most interesting stories. I mean, to be a journalist in South Africa is to sort of have a really close seat to dynamics and stories, and people's lives can change in ways that are just unimaginable in other countries. Does that help you, do you think, the fact that South Africa is such a rich canvas? There are so many, to say interesting people sounds ridiculous, but there are so many stories that I don't think you get in other places.
No, 100% I agree with that. I mean, I think that we have such an incredibly diverse society thrust together. And, we did a show after Yizo, we did a show for the SABC called Zone 14. And in a way, it really, captured this very well, that in one block, in one street, you could have so many different people living next door to each other: a school teacher, a millionaire, a bank robber, a taxi driver. And it makes for such an exciting society. And I think that we've got so many complex stories that we've shared. And, the human condition, aside from all the complexities of race in South Africa that we've had to overcome, that we've had to grapple with, that we keep grappling with every day. I mean, it's here, present all the time. I think this makes a society that talks about interesting things. We are interesting, I think.
I agree. I think we are. You're with The Money Show. It's 14 minutes now to 8 o'clock, and we're speaking to Desiree Markcraft, an executive producer and someone who's had a very interesting career in TV. I would like to talk to you a little bit about Shaka Ilembe, Desiree, and let me just explain where I come from. I'm just old enough to have been allowed to stay up as a kid to watch the 1980s production of Shaka Zulu when it was shown on TV at the time. And I'm always amazed at how it still has such power today. I mean, I've come across young people who actually believe the image of Shaka is the image of Henry Clele, the actor who played him at the time. He was a footballer before that. Was there something about that series that maybe made you want to make Shaka Ilembe to kind of move away from that? Because that version, in my mind, at least the 80s version now, is highly problematic.
Well, it wasn't that series that inspired us to make the current one, but certainly, of course, that series lives big in our imagination. And Henry Clele was a fantastic Shaka. And as you say, there are many things that are problematic with that series in the 80s. But let's go back to the 80s and remember that at that moment, that series was incredible to have on local television. It was the first time that we had seen such a powerful representation of a black South African hero, of a king. And in many ways, forgetting many of the inaccuracy or political things that make us uncomfortable about that particular telling, which was through a white lens and a foreign gaze, it still was a series that held the character of Shaka up in high regard. But really, our story came from a totally different space. I mean, it came from me being a mother and having mixed-race children and wondering, what shows and what are we talking about? What are our kids watching on TV? Our kids are all growing up with American, Hannah Montana and Ben 10, but who are our heroes? And so many of our heroes that we see and speak about have been particularly formed around the liberation struggle. But, colonial history is only a few hundred years. There's been thousands of years of pre-colonial history with kings and queens and rulers and complex societies, and those stories have never been told. And so when we started researching, I was sort of interested in the notion of telling stories when we were kings. And when I started researching, I realized that there's just nothing visually available for young people of today to find, to read, to excite them about African history. And so, we went about trying to put the show together, and Shaka, of course, is one of the most exciting African leaders. I mean, just across the continent, and he's a worldwide recognized figure. So it felt like, well, if we're going to start, let's start there, and let's start telling that story first from an African lens. And so our launch pad was to go and find out who this man was and what society did he live in.
I mean, there's a wonderful book called Shaka, Myth of Iron, which goes back many years. I think it was by Dan Wiley, that sort of explains all of that. Well, sort of tries to. I mean, it's very complicated. Did it spark the debates that you wanted? It had a huge impression. I mean, everywhere where I was working, people were talking about it. Did it start the debates, do you think, that you wanted? Do you think it had the kind of... And it's very hard, in a multi-channel world. I mean, it's very hard to make any kind of impression at all. It certainly made one. Did it do what you wanted it to do in terms of what we're talking about?
Yes, I think so. And I think that it's a slow burner, that it'll continue doing it, because, what we wanted to do was get people starting to talk about South African history and the people who, populated this continent, and in a way that getting people interested, getting people starting to look at their own history, their own ancestry. We spent a lot of time meeting with people, meeting with descendants, meeting with members of the royal family, meeting with oral custodians, meeting with praise singers, so that our telling was not just the telling that was in history books, but also trying to really understand the cultural nuances in which the story felt like it should be told. And I think that the time taken to do that has resonated. We've had an incredible team with us. Nhlanhla Mtaka, who's, my co-executive producer, has just been an absolute bron of information and meeting so many people, of course, meeting, our previous King Zwelithini and the current King Misizulu, but also just the richness of this history that was surfaced. And so we hope that, we were so excited, of course, that people have embraced the show so well. But really what we want to do is that this is the door that we're simply opening to much bigger telling and many more tellings of African history.
We're speaking to Desiree Marcraft, the co-executive producer of Shaka Ilembe. She's with us for another 8 minutes. It's 8 minutes now to 8 o'clock. It's 6 minutes now to 8 o'clock. We're speaking to Desiree Marcraft, how she makes her money. She's a film and television producer. Desiree, the people who do work in TV that I know and in film will all tell me one thing. It's long hours and lots of unbelievably hard work. If you don't want to work 12 hours a day, don't bother.
It's 100% true. It's a very hard, but it's also a sort of lifestyle, I guess. Once you get addicted to storytelling, somehow those long hours don't feel so long because you're excited about the work that you're doing and you're crafting and creating. But yes, they're very long hours and very early mornings.
And I imagine a lot of teamwork as well. You actually need to get on. You're going to chew a lot of fat, talking a lot of nonsense to each other while you're waiting for the next shot or for the sun to be just so.
Yes, there's a lot of teamwork. There isn't really that much time for talking nonsense, to be honest, because, you sort of have to be ready. Each department has to be ready for when it's their turn to be on, so to speak. But, the other thing about it is that on a show like Shaka Ilembe, for example, it has this sort of massive ability for employment. On the last season, we employed close to 20,000 people. Sure. And of course, many of those are background extras, so they're there for a day only or 2 or 3 days. But even there, you find on a set, there'll be 400 or 500 of us there. There's a real camaraderie that happens because we're all there for the same reason. And, on a show like Shaka Ilembe, of course, we all feel very strongly about what we're doing and the importance of the sort of legacy of what we're doing. So, yeah, there's camaraderie and long hours, but, often a very good energy in those spaces. So you come away after a 3 or 4 month shoot feeling like you've made family and you've built something together, and then suddenly this family is disbanded, which, of course, leaves you feeling a little empty for a few weeks afterwards.
No, I'm sure. The way in which we entertain ourselves is changing, and I mentioned earlier that Shaka Ilembe landed in very much a multi-channel world, by which I mean hundreds of channels, everybody watching things at different times, very different from, say, watching TV in the 1980s. Do you think the demand for content like that, I'm talking about episodic series, 46 minutes or so, maybe an hour, maybe in some cases an hour and a half if you look at something like Yellowstone. Do you think the demand for that is going to continue?
I think that good storytelling will change its forms a little bit in different ways. But yes, I do think that demand will continue. And I think that is about, in a way, these big television drama series is the new book. We're reading at the moment little bite-sized things on our phone, and so much information is flying at us in bite-sized moments. And there is something about just sitting down with a cup of tea or a glass of wine and enjoying a good story for an hour. And so I do think that there's, still a lot of life left in this form of storytelling.
I mean, you say it's the new book. It's also kind of the new fire, isn't it? You sit around and tell a story about the around the fire kind of thing. When you start to look now for new productions, new things to film, do you get, thousands of ideas being flung at you from various places? Or is it quite difficult to actually know this is what we're going to make a story about? This is the story that we're going to tell. I mean, there's so many stories in South Africa. I mean, I think people would watch a Steve Biko mini-series, There was a Solomon Mahlangu movie a few years ago, of course. I think people would watch something about maybe a Rain Queen might be kind of a good moment for that. There are lots of different stories.
Yes, I mean, I think, stories come to people in different ways, and certainly in our company, stories have come to us largely because we sort of feel that we are constantly trying to tap into what is the zeitgeist of the moment. What is it that people are feeling? What do we feel like, will be that piece of entertainment that will resonate in a particular moment? So, perhaps, as I said, in the 90s when we made User, we were full of optimism and we could see something that was a little tougher about ourselves. Now here we are and we're feeling maybe a little, the world is tough and, the rose-tinted glasses on South Africa are not there so much anymore. And that's why it felt like it was good to tell a story that said, hold on a second, let's remember where we come from. Let's remember the dignity of the history that has come before. We're not who we are today. And so I think just tapping into the zeitgeist of any moment does help give you an indication of what kind of content there is. And of course, with all the streaming platforms, anything works. You're going to find your audience.
Desiree Marcraft, thank you so much. I really enjoyed that. She is the film and television producer and one of the minds behind Shaka Ilembe.